Hello everybody. First of all, I'd like to start off thanking everybody who's been watching my videos and who's been subscribing. That means a lot to me, and it means a lot to YouTube too, because that's what they track. They track people who subscribe. And now I'd also like to thank my members. Since I started that only a few days ago, I've got a rush of members, and that's really appreciated. That, it makes me feel great, makes me want to do more, and it's a feel-good feeling that people are prepared to pay a few bucks to see what I've got to say. Today's rant is about what you should be looking to invest in. This is not advice, this is my opinion, and it's an idea for you to think about. Now, right now, the markets are very much driven by FOMO. It's always been the case. It will always be the case. And FOMO is a very, very dangerous thing for investors. You have a habit of getting in at the top. So when people are queuing for gold in Australia, like some videos were showing a few weeks ago, you kind of get the feeling that FOMO is in place, is running riot, and it's the top of the market because so many people get in at the top and get out at the bottom. And that's why they lose money. And, they're totally excited because everybody's making money. They pile in, the market stops going up, starts to go down, they panic, they run away, and they lose money. It's their particular vicious circle in investing and trading. And they're not investing, they're trying to make quick money. And that is not a good recipe. So what is a good recipe? Well, a good recipe is to work out what you think might be coming next. Now, we all have ideas about what's coming next, and it tends to be a pretty negative picture for most people, but it doesn't have to be. Think about what's coming next, and then stake that out. So, for example, I've been going on about AI boiling the oceans. It's clear that if I'm right, energy is going to be in great demand. Now, if you look around in the markets, you would be forgiven for thinking that that's not going to happen. You'd be forgiven in thinking, well, if they're going to boil the oceans, they're going to need all the energy possible. So all energy will be heading up because everybody realize that they're going to need more of that and there isn't enough to go around. And that could be coal, that could be oil, that could be gas, all sorts of things. And the same goes for electrification, which obviously is going to be a big move under that model. They're going to need copper. Going to need lots of copper. Going to need so much copper. There's just not enough copper to go around. And as such, copper should have gone mad by now. It hasn't. It's kind of, picking around. It's not doing badly. Copper mines, that's quite a sexy place to be right now. So maybe that's right, maybe that's wrong. Well, obviously, I think I'm right about that. So the way to make money from that idea is to track those things that should be affected by your theory. Now, if you're wrong, they won't move. If you're right, at some point they'll move. At some point they'll start to behave in the way that you expect them to because other people have caught on. Now, according to investment theory, all that is known and all the prices are right at all times. Well, to an extent, that's correct. But when it isn't, there's a lot of money to be made. And it tends to be the case that people in the market can be slow on the uptake, particularly when there's been long trends and everybody's used to following the same old. So the world changes, but they don't change alongside it. So they will carry on back in the same horse, even though it's going to be a different kind of race. Because of that, you have an idea and you say, this new wave is coming, and therefore it should affect the price of a particular company, a particular sector, a particular economy, whatever that is. And then you don't pile in. You don't look yourself in the mirror and say, what a clever boy you are. You just say, well, in that case, these things will happen. And therefore, I'm going to watch them. And when they start to behave in the way that I predict it will occur, then I'm going to buy. So for me, those things are copper and oil. Now, oil is as cheap as chips and remains as cheap as chips. But it won't be forever in my theory about AI boiling the oceans. At some point, oil is going to go through the roof. Not today, not tomorrow, not this year, not next year, but sometime, according to my theory, it will go. Now, obviously, according to my theory, copper will also have a big run at some point. Aluminium probably also. So you stake them out. Now, I'm not sure about aluminium. I'm pretty sure about copper. I'm very sure about oil. And oil is probably the furthest away from going up of all those commodities. But in my mind, it's going to happen. First, it should be copper, then in due course, it would be oil. But I'm not long oil. I'm long copper, but I think that's going to be soon. But I'm not long oil, but I am watching oil. And I will start to buy oil companies when oil starts to perform in the way that fits my theory. So that's what today's rant's all about. Don't do FOMO. FOMO, 9 times out of 10, will kill you. Do the opposite. Have a theory, plot out what it means, plot out what should be affected by that theory, then stake out those instruments and just watch them. Watch and wait. Be like that crocodile on the shore. Just lie there, wait for the opportunity to float by in the river. Then jump on it. Hope this was useful. Hope you enjoyed it. I'll be back soon in a couple of days with another rant for you. Bye now.